Hey guys, what's going on? Hope you had a great Thanksgiving. I'm traveling back to Chicago, and I didn't really get a chance to be on yesterday with you guys, so I just wanted to do a quick video before I hop on the plane, and um, we'll hit on global macro. But I just wanted to reiterate. I put out a couple emails. If you guys want to join the prop team, I'm still doing those Black Friday sales, so um, check the links in this video. I'll post in, I guess, the Symphony, and then I'll send out hopefully another email here shortly. You guys can take advantage of that. And then also, I've been thinking about this for a long time, and I'm launching this new volatility trading service. And if you go to, here, let me share my screen. Guys, this is probably my best strategy. I've talked about it a long time. When you use UVXY, I like to trade that inverse ETF that has a lot of decay. You know, those are leverage ETFs, so they naturally drift down and to the right. And when you start to learn about options, you'll see how we play those put ratio spreads on those ETFs. But now with the advent of the E-mini futures on the VIX, before, if you wanted to trade the VIX, I mean, it might be 22 to 25 grand just for one contract. So now with the advent of the mini micros, guys, you can trade these VIX futures, and I think it's a fantastic strategy, three-prong approach. Trade the VIX with calls. We're going to trade the futures, both long and short. We're going to trade down the curve, so sell the front. You could sell the front month short, and then the back end would be long as far as futures, and then trading the options on UVXY. It's if you guys will focus with me on as part of this service and this team, I almost guarantee you're going to make money every single month. It's just a matter of really dialing in and paying attention. But when we do get the vol spikes, I mean, there's just amazing opportunity. We talked about it. If some of you have been with me since the beginning, I've started, JRM, and I've talked about UVXY. If all you did was learn how to work these short positions, these core shorts, and use the options. We were setting up core shorts here from the 90s all the way into 110. You're back down all the way at 111. But if you back this out, guys, on the UVXY, even out, make sure I'm sharing my whole screen. This is a great opportunity. And there's other ETFs that we could do this on also. UVXY is the best. But they keep, they reverse split this, so the chart isn't actually going to be able to probably pull back as far as I want. Let's try this real quick. I'm not going to be able to bring it out. Let me try one more time. I mean, look at this. This pick gets cut in half all the time. The last time we had a big spike in vol in May, June, boom, it goes back down to 24. Gets back up near the pie line on some of the higher time frames, gets cut half again. So this is a great vehicle. Again, it's probably our most successful strategy. I've never had a losing year trading vol between the VIX, UVXY, and the futures. And then you guys can do the same thing on the bigger contracts if you want, but you're going to be able to follow along on the micros. We've already been trading these a little bit. I love it. So anyway, it's going to be very specific. We're going to be very busy on the vol side. And so before I get into global macro, if you guys go to jenkinscm.com, I just added it under the membership section here. And I'm going to run the service at about $1,000 for the year. But in line with all this Black Friday stuff, I want to get you guys out access to this for just $4.99. And it's going to be more than just trading the charts. I mean, I'm going to teach you guys about all the differences as far as we've got to realize that what moves a lot of the markets is the options and the sensitivity around the deltas and the options on the underlying price of the indices. And so what happens, and this is true for a lot of the market, what's pinning and moving a bulk of the market has to do with the options and the dealer's positioning. So we have to start paying attention to things like the gamma exposure, what they call Vanna exposure, which has to do with implied volatility. And if this is all changes or rates of change in the underlying price that moves the delta, the rate of change in implied volatility, and then the time factor. And so we're going to learn all, you're going to get into all of this. It's not just about the charts, but click here. You guys can sign up. It's only gonna be $4.99. Oh, I gotta fix that link. Shoot, I'll get that fixed. But you click that get access, and you'll be able to purchase it. It's $4.99 for the year. And it's gonna be great because we're gonna go over stuff like, show you. All right, like there's these gamma exposure indexes versus the S&P that we can monitor. Going to get into different strikes and how that applies. You look at the implied order book. I'm going to get into some of these. I'm just giving you some visuals here of stuff that we can go over. So, and you're going to learn. Most of you probably aren't even familiar with Vanna exposure is. So that's right here. Options, dealers, delta, sensitivity to change in options, implied volatility. But this is a huge part of the market. So there's times where that gamma exposure for the dealers and the big players is low. And then there's time when the market breaks, and what it does is it affects the liquidity. So when dealers or investors are writing a lot of puts, the dealers are having to take the other side of that. So you're adding the market, the dealers are adding and subtracting liquidity based on a lot of the option pricing and the gamma and where the kind of the market's pinning or focused on certain strikes. And when those levels break, and when you're monitoring, see, a lot of guys want to use the order book as far as the orders, limit orders inside of market profile, but that no longer is relative, because even back when I was on the desk, you have dark pools, you can hide all your size. I mean, I might have $1 billion to buy in treasuries, but I only show a 5 lot because I'm hiding all my size. So that's not what matters now. Now where you want to look at the size in the market has to do around the options books. And that's where you can get an edge and a feel for where the big pivots and the big points are in the market. And so look at this is stuff I'm going to teach you guys about how when implied volatility goes down, if you have a lot of put sellers, and that actually creates a short in the market, and what that does. And then a lot of times that can squeeze the market higher, and that's when you kind of get these gamma squeezes to the upside. That was a big thing in the markets a couple months ago. All right. So anyway, lots to talk about. Just lots to learn there. So I think it's another great service to have. Once you kind of get the basics of the model down, and then a lot of you have been learning options and futures. Well, now you really want to focus on getting down the options as it relates to volatility. So, hey guys, I'm excited about that. Yeah, sign up for that. It's going to be good. And then also, I still have the discount on the prop program too, guys. So if you saw in my email, I talked about how I'm also willing to give out $500 for anybody that refers anyone into the program, as kind of recruit more traders. You can think of it. So I'm willing to partner with anybody that wants to kind of do that and get intentional about maybe doing some stuff on the marketing side. But I think it's a way that you guys can make some extra money if you want to team up on that, and or you just want to join the program. I mean, it's 50% off still right now. Just go back to that same membership site and go here and click the prop program right now. Boom. And it's going to take you to the 50% off page right here. All right, so just real quick how we finish out the week. I covered some silver, so gold got smashed again here late. Oil's back high, inflation's taken off, dollar's still weak, pushing up towards 120, and so I think it's going to be more of the same. We talked about now growth is probably going to start to accelerate as we get closer to the first quarter because now we're comparing against the market's going to start to front run better comping against the pandemic, and so all the bad numbers we had this time last year, it'll be a little bit easier now to compare against that shitty data. So I think the market's set up to go higher. I told you to stay long the Nasdaq. That was a good call into Friday. And I think you're basing and looking like you're starting to break out. Can we have a false breakout? Sure. But I mean, machines are all going to have to chase these new highs again if it goes. I mean, we talked about Amazon's like in a nice wedge. It's starting to try to break out. Amazon almost doing the same thing. Like I know the news is different with Tesla having to be added to the S&P, but you can see that it based, and then as soon as it starts to take out that ascending wedge, guys, you can get a lot of movement. So I think it's going to be the same here for tech. That's kind of how I'm leaning into next week. Keep buying dips on Nasdaq. Oh, we had a nice dip here. I didn't even really was paying attention to futures on Thanksgiving, but I guess they were kind of moving around into Asia. I took a little bit and then added back here on this pullback, and then I'm going to see how we open up Sunday, but that's what I'm thinking as far as equities. I talked about Euro. We're pushing up towards 120. Yeah, maybe you fail at the top of the range, but this isn't an uptrend, so bullish Euro, bearish dollar. Oil, same thing, breaking the top of the range. So this just looks like one big giant inflation trade again. I would not want to be on the short side. Aussie's back on the highs. Oh, and then I was busy in bonds actually. So the amount of debt globally, guys, just continues to go higher and higher. I think Armstrong had it something about it was like 280 trillion in debt now. But his point was, it's like, what does it even matter? Because all we're doing is printing, and nobody has any intention of paying anything off. So at some point, that's going to be if we're going to have some sovereign default risk, even in treasuries, the long end's going to get smoked. Oil's starting to break out again. You're getting break evens are starting to pick up to the upside. So the more inflation you get is worse for the long end also. So keep selling rallies. I sold some 30s. I covered it. I re-shorted some more. If you're long 10s against your short 30s, you'll probably get a chance to book some of those gains maybe here on Sunday night. So keep playing that 10s, 30s type of short. And if you guys have been short silver with me, an opportunity to cover Friday, that was kind of the only big thing I did. But I think it was like a $4,000 or $5,000 day on short silver. So, hey guys, hope you had a great Thanksgiving. I'll be traveling here, like I said, and hopefully be on Sunday night or Monday morning. If you guys have any questions or you're new, just go again to jenkinscm.com. Encourage you to sign up for the total trading package here. And or if you guys are already on the program, let's get you in the in this volatility trading service. We'll start whipping around some vol trades. And then if you just have any questions, you go to jenkinscm.com, go to the content page, and you can grab or you can sign up for our Telegram. It's free, and you can message me there. That's probably the easiest way to get in touch with me. All right, guys. Yeah, that's all I got. Have a good one. Talk to some of you soon.